Welcome guys, I'm glad that you joined me today. I want to make it clear that I don't want to spread any FUD. We just want to show you some charts that indicate that there could be a crash this year. And if you are simply aware, you can come out much stronger where others get wiped out. 2021 has been the year of insane money printing. The Federal Reserve has propped up asset prices and the stock market to new highs. But they can only do this as long as inflation doesn't get out of control, and people start to notice prices of daily goods increase rapidly. In this video, we'd like to show you what can cause a crash, signs that we move from inflation to deflation, and how we allocate our portfolio if we see deflation. The pandemic has really crushed the economy in the past 2 years. Many businesses were forced to close and can't produce any goods or services. With the new variant, it doesn't look as if that is going to change much this year. But it's not just the US economy. We see this globally. And that could be a catalyst to the next market crash. The chart of the velocity of M2 money supply really shows the weakness of the economy. The chart shows you how many times a dollar exchanges hands to buy goods and services. You can imagine this chart as the heartbeat of the economy. And right now the economy is slowly dying. The Buffett Indicator is great if you want to find out if stocks are over or undervalued. And I have to say, this chart really scares me. At the black historical trendline, prices are fairly valued. Then we had the dot-com bubble, where stocks were strongly overvalued and it was followed by a crash. On the other hand, a great buying opportunity was after the housing crash in 2008. But look where we are right now. Taking this indicator, we have never been more overvalued. So sooner or later we have to see a move to the downside. The next chart compares housing prices compared to inflation, rent, and wages. Prior to the last bubble in 2008, housing prices rose much faster than the CPI, rents, and earnings. Since 2012 we have seen the same thing happening. So how much longer will it take for this bubble to burst? Next up we have the US population by age and generation. This chart is very important because many baby boomers start to retire as we speak. They have been building up their retirement fund for their whole life, and most of this money is invested in the stock market. Now is the time where they have to take money out of the market, and if millions of people have to do it, the stock market will be under huge selling pressure. As you can see, there are a few events that could trigger a crash. That's why we want to prepare early. Many people think we will see inflation, but we think during a crash we will actually have deflation. What triggers the change to deflation? In his book Conquer the Crash, Robert Prechter says, "It's the general willingness to lend and borrow, and the general ability of borrowers to pay interest and principal. As creditors become more conservative, they slow their lending. Borrowers produce less stuff because they can invest more in their business to increase productivity. Consumers become more careful and spend less money." This goes back to the chart of money velocity. Less money spent puts downside pressure on prices. When social mood turns negative, velocity will fall even further. Credit will shrink. The stock market will fall, and the economy will contract. If that happens, what are good investments in this kind of environment? We have allocated our portfolio in 3 parts. We put 10% into gold, 60% in crypto, and 30% in stablecoins. During a crash, the best asset that you can hold is actually cash. Stablecoins are even better because you can safely earn a 10% yield staking them. If you want to take on less risk, have a higher percentage in cash. Crypto and gold will lose in value during a crash. Gold probably not as much as crypto. But that's when you want to use your cash to buy up all the cheap deals. In 2018 I was 100% invested in crypto. Unfortunately that put me into a position where I couldn't buy any more when prices dropped. So balance your portfolio smarter to take advantage when a bear market occurs. Besides cash, Treasury bonds are also doing well during a crash. To be more precise, it's the 30-year US Treasury bond. If we take 2008 as an example, it rose 40% when all other assets got destroyed. Whether we see a crash this year or not, I think it's a good idea to prepare early. What you can do now is make a list of all the cryptos or companies you want to invest in. A crash might only last for a month and you don't want to make your research at the last minute. Let me know your thoughts on the current market state in the comments. If this video was helpful, please leave a like. Thanks for watching.